Hello, I'm Donald Leggett, and welcome to the latest London South East CEO interview. I'm joined today by Eric Zurrin, CEO at profitable East African gold producer, developer, and explorer Shanta Gold. On Monday, AIM-listed Shanta announced a positive 5-year production plan for the group. However, the market reacted to lower production guidance for 2021, and the share price fell. Greetings, Eric. We saw you in May at our Natural Resources webinar. It is great to have you back.
Thank you for having me on the show, Donald.
Eric, it's always a pleasure. Let's start with Monday's announcement. Shanta announced a strong 5-year plan for the group, but the markets reacted to Q2 results and a 2020 downgrade. So talk us through the softer production numbers, if you may.
Well, let's start with this 5-year plan and get on to the production numbers in a second.
5-year plan.
Yeah, so 5-year plan we announced was the first plan we had put out in 4 years. So this is the first 5-year plan since early 2017. And in this plan is 500,000 ounces of gold production on a reserve base from two diversified assets, 2 different projects. That's a good plan in my view. That has a lot of value, and it's the fundamental story to Shanta, which is cash flow creation. Now, on top of that plan is upside through additional exploration at both of these assets, our new Luika gold mine and our Singita asset. Also on Monday, we announced our Q2 results, and the Q2 results included an update to our 2021 production. What we learned is we had a geological information resulting in from underground mining in the second quarter, which led to a fault about 375 meters below surface at our main Bohenia Creek asset. Now that asset has been in production for 9 years. And this is the deepest it's ever been. And this fault caught us by surprise. It displaced the ore, it pinched the ore in. And when we were mining there in Q2, what we found was very low grade relative to what we expected. Faults and geological disturbances are not new to mining. These things happen. And what's important is to have flexibility in your plan. And we expected to be able to mine from another source called BC East Area 1. This is a deposit or a target that we published a resource on. It's a very high grade, 4.5 to 5 grams. It was in the plan for Q4. And at the end of June, when we did our mine planning and scheduling for the year, that source of ore could not make it into this calendar year production. As a result, we revised our guidance down. We were shortfall by about 16,000 ounces at BC Deep, and we're looking at ways to make that up. But today's guidance and the guidance announced on Monday is the guidance to use for this year.
Okay. And from your perspective, what about the share price fall of 25%? Was that an overreaction?
Yeah, I mean,
my words, not yours, but was it an overreaction, do you think?
It's also worth pointing out that we had a VAT refund on Monday.
It's happened.
Which again was, I would say, unexpected, in terms of the market size. Since the start of the year, we've added a lot of value at New Luika and Singita.
Let's just dig down on the VAT refund. How does that work? Do you actually get the money back, or do you just simply not have to pay something else? Is it a balance sheet thing? So
we have $31 million. We had $31 million owed to us by the government of Tanzania, and we had a final installment payment of our 2020 corporate taxes due on June 30th. So there was a payment of $6 million that was due. That's how it works. You similar, like every other country, you can pay 6 months later, and we had a $4.2 million offset against that. What's important though is this VAT that was refunded to us by way of offset was for the period second half of 2020. And now the government's already started the audit process on the first half of 2021, which would be another $4 million. So we see this as the beginning of regular refunds going forward. The bigger story, Donald, really with VAT is this $23 million that's locked up. And we've had indications that the government's thinking about that. They're working on it. And I'll be seeing the senior ministers next week in Tanzania. Which is really terrific news. I mean, it's unexpected from every individual I've spoken to. They did not see this happening. So it's good news.
Okay, and you're hoping to get a further 23 million back in VAT.
Yeah, we wouldn't give a timing on that, obviously, but that's clearly what we're working on resolving, and then the ongoing refunds on an ongoing basis. So to answer your question, was a 25% drop in our share price warranted on Monday? You know, it was the worst trading day of the year for all markets globally, I'm told, and it coincided with below expectations on our 2021 plan. On the other hand, we delivered a lot of value in new reserves. We've added VAT refunds to our story, and we have 3 assets that we're actively growing. So, you know, it feels like a little bit overdone in my view, just to say it gently, but you know, maybe that spells opportunity for others.
So in terms of institutions and even in terms of retail investors, rather than this being a selling opportunity, the selling's been and done. Does this therefore become a buying opportunity in your view?
Indeed, yeah, we've had a handful of inbounds already from financial investors seeking calls to understand the story and expressing interest in the shares. So you know, it's been a busy week, speaking to a lot of non-holders who are interested in considering Shanta as an investment. Okay.
And if you could talk us through the revised guidance for the 2 Tanzania mines, New Luika and Singita, you've nodded to the 5-year plan. If you could give that some more detail, please.
Right. So the 5-year plan sets out production from New Luika over the next 18 months, and then a second asset, Singita, from 2023, so the end of 2022. So we haven't changed any of the production plans for Singita. It's merely the second half production forecast at New Luika that we've had to update, given what I explained already in terms of this fault. What are we looking for going forward? Well, we're encouraged by the fact that we'll soon have 2 revenue streams. You know, so you have more flexibility in our mining, more diversification of revenue, and ultimately that leads to lower risk when you have more revenue streams than one.
When does the revenue stream from Singita start?
We in the plan, it shows January 1st, 23. So we'll 18 months away from today.
Fantastic.
And then on the horizon, Donald, is the West Kenya project, which we should discuss because these are world-class grades, and we're making a lot of progress there with the drill bit. So that's on the horizon, possibly 25. But
so when will the construction decision be taken for the hugely exciting West Kenya project with phenomenal grades?
Phenomenal, it is true. I mean, look what we've had in the assays, 6 grams or 6 meters at 220 grams. I mean, anything above 32 grams per ton is bonanza. You know, think about you have a ton of rock and you have a gold coin in there, 1 ounce gold coin. I mean, that's the equivalent, and that is, you know, that's phenomenal results. So we've had excellent drilling results year to date at West Kenya. There's still more to come, and I'll cover that. But the construction decision would be sometime in 2023 as we go forward with the infill drilling and some of the studies.
Okay, but it all seems very organized and ordered, and you seem a very grown up and together company in the way that you approach these things.
Well, this isn't our first year of production. I mean, we've been producing for 9 years at New Luika, and we've been in Tanzania for 2 decades. You know, I think we've literally just passed our 20th anniversary as a mining company as an explorer mining company in Tanzania. So this is our backyard. You know, operationally, we've been in the Bihini Creek asset for 9 years. We've been producing for 9 years. We've generated sales. I think it must be close to about $1 billion now over that period, and we're a well-established gold producer with a super exciting growth portfolio.
So my question here says the business has never been in a stronger position for growth, as you've just outlined. Talk us through the key financial metrics. I know that you're not Luke, but but if you could give us the key financial metrics, please.
Right. Yes, you're absolutely right. I mean, the financial flexibility we have on the balance sheet is excellent. So we're sitting now with $24 million of net cash. We have no debt, I think it's just under $1 million of debt related to some equipment financing over the past couple of years. We're unhedged. We have a $27 million receivable with the government of Tanzania. It has now shown it's starting to be refunded. That's $51 million in total there of liquidity. As I said, no debt, and we're generating cash flow from our producing asset. So a ton of flexibility. What we've said categorically time and time again on every call this week, Donald, is that our commitment to a dividend is intact, and there's no change to our investment in the growth assets. So we're going to stick with what we've said all along, and no change to how we're allocating capital to the three assets.
Okay. What news flow can we expect in the next few months from you?
Well, I mean, instead of the next few months, let's talk about the next few weeks, really, because it's incredibly exciting, particularly from West Kenya. Now, we finished our phase 1 drilling a few weeks ago. This is the first 9,000 meters, and there's still assay results to come. We expect those out probably in the next 10 days, 10 days to 2 weeks. And that'll be the final piece of the puzzle before we then upgrade the resource for the first phase of drilling. So what does that mean? Our objective is to convert ounces from inferred to indicated and add new ounces back into inferred. So in terms of those two catalysts, call it 2 weeks from now and then 2 weeks after that. So in the next month, we'll have 2 sets of announcements out of West Kenya. The drill bit is hot at New Luika. I mean, it continues to drill. And for us, the value driver of drilling is the result is new reserves. Can you extend the mine life? And yes, we can, because we've done it many, many times over in the past few years. And then, of course, Singita. We don't have any specific updates there, but it's on track in terms of the construction, and we'll continue to provide updates to the market.
Okay, pull together all those strands for me and explain to me why investors should hold shares in SHG rather than your competitors.
Well, at the end of the day, I mean, the story of why you would hold a stock is the future value. It's not so much the past, because all of that's already baked in the share price. So as an investor, you have to take a view, what does the future hold? Now, for us, there's optionality across 3 assets. You have the producing asset, where you're completely exposed to the gold price on a day-to-day basis. You also have reserve extension there through drilling. And then on the other spectrum, you have this West Kenya property, which we acquired for $14 million and have had absolutely blistering drilling results. And there's more to come. So, it's not like we have one project in one country and we're there churning the wheel and producing gold and that's it. I mean, Shanta's gone from a deleveraging story in 2017, 18, and 19 to a growth story. And the growth is being driven by the drill bit, and it's being supported by the cash flows we have. The downside risk in Shanta is probably greatest to the gold price, but that's also why investors want to ultimately own a gold company, is because, when the US dollars increase by about 35% in 1 year, you might be thinking twice about where you want to store your money. So anyway, so Shanta's got this great growth story. There's a lot of future value to be discounted, and we're continuing to invest to realize that value.
Eric Zurrin, thank you, CEO of Shanta Gold. Thank you so much for joining us today. That was absolutely fascinating. Okay, that put a lot of things to bed there. Thank you so much. For Shanta investors, you'll find more share price information and free data about the company on the London South East Bulletin Board. You can follow us on Twitter at London South East. And if you subscribe to London South East YouTube channel, you will get alerts to fascinating interviews like this one. Thanks for watching, and make all your investments do well.